Good afternoon, everyone. Just wanted to let you know we're going to get started with the Hangout just in a quick second. Had a couple technical glitches, but hey, I tell you what, once this thing gets to rocking and rolling, this is about your money, and we're going to answer some major questions. We're letting Dominique join us, which is my co-host for today. So just bear with us real briefly, please, and we're going to get this thing cranked off. Tell you, Google Hangout is a very useful tool, and sometimes there are some technical glitches and challenges that we have, but we promise you a great show today, everyone. I believe we do have Dominique on. How you doing, Dominique?
Hi, how are you?
Super fantastic. Apologize for the delay getting some things started. You getting everything all set up on your side?
All right, do you see my video?
No, I do not see your video.
All right. I know I'm on Safari, so
I thought you were going to do Foxfire.
yeah, that's what I meant. Firefox. I'm on Firefox.
Firefox. Okay.
All right, I'm there.
How are things out there in DC area for you? Oh, we just lost her. Some of the things, again, just to give you a little highlight that we're going to be talking about today. The name of this hangout is the triple play strategy to income shifting. So when it comes to income shifting, what that word simply means is taking you from where you are today and really getting you to where you want to be in the future. Had just a great meeting this morning with a financial advisor in the Tulsa, Oklahoma area, and we see this is a national need for awareness when it comes to wealth and tax management and so forth. So some of the things you're going to hear today is you're going to get some information on tax reduction strategies and so forth. So bear with us, and we're getting this thing kicked off in just a quick second. All right, we're going to go ahead and get started, and my special guest, Dominique Hackett, she's going to join in with us as soon as some technical things on her end get straightened out. But we talk about the triple play, and basically what we're getting at when we talk about triple play to income shifting, it's a great topic. And first of all, let me introduce myself. I'm Eric Smith. I'm the founder of Smarter Money Now. My background, 8 years ago, I got into the financial services arena. And coming into the financial services arena, it was fun because I was able to help people approach financial planning from a completely different standpoint than the traditional way of doing things. And so when I came into the business, the markets were booming, people were making money, stock market was rocking, but our clients were learning some things that people traditionally were not being taught. So when the market collapse happened in 2007, 2008, my clients were in a very beautiful position because we did not participate in any of the downfall of the market. They were set up to only participate in the upside of the market, but were insulated from the downside of the market. But the challenge, though, is that lots of folks were not able to sustain what was going on in the marketplace. So lots of money was lost and so forth. So what I noticed in 2009, I went into a journey of creating more financial education and literacy. And in creating financial education and literacy, that's when I launched the Smarter Money Now brand, which is completely dedicated to bringing financial awareness to every one of the American people who want to do better when it comes to their finances. And in wanting to do better with our finances, it's a great goal because in doing better with those finances, then we can make sure that we achieve the goals that we have set for ourselves. And you think about it, why do you go to work? You go to work for only one particular reason. We've got Dominique. Are you there, Dominique?
I'm here. Can you hear
All
me?
right. Yes, we can hear you. Welcome aboard. We're just simply
Thank you.
giving some background about starting Smarter Money Now and why I started Smarter Money Now. And I'm glad we got these challenges overcome. It's a little bit frustrating. But the reason we go to work. But before we get into that, let me just introduce to you my co-host, Dominique Hackett. Dominique comes to us from the capital of the United States, Washington, D.C. Tell us what's going on out there in Washington, D.C., Dominique.
Hey, the weather is nice today. You know, it's a wonderful day in DC, so I'm happy to be here.
Okay, outstanding. Well, I'm here in Oklahoma, Tulsa, Oklahoma, and the weather is well as well. We were probably in the 60s. Last Friday, we were at 84, so we're almost hitting 90 in the wintertime. It's crazy. But that's
Wow.
all right. That's okay. We won't complain about it. But
Exactly.
we're going to dive right into this triple play conversation. And what I was simply leading out with was the fact that, we work for one reason. And one reason is to take care of the lifestyle and our needs. You go to work to make sure that your family is taken care of, all of the necessary bills are paid. You want to make sure that uh, uh, your kids are taken care of, have a little extra money so they can play soccer, cheerleading, and all those types of things. So you go to work to pay for a lifestyle. And in paying for that lifestyle, we also should be putting monies away into what we call investing so that that lifestyle is continued when we decide to stop working. And for a lot of people, that's called retirement. And at some point in time, we all have to be cool with the idea that we may or may not be working forever. So, how are you doing when it comes to building your source to income? I mean, how critical is that, Dominique? You're muted.
Hello, can you hear me now?
Yeah, we can hear you now.
It's absolutely critical, and mainly the reason is because now it's the information age. Back in the industrial age, they used to take care of your retirement years. You would get a pension of some sort, so that one day when you do retire, your job took care of that for you. But nowadays, they've switched over to 401ks and things like that. So you pretty much have to take care of it yourself. And, as a manager at the bank, I see it every day. There are these seniors who are struggling because they still owe on loans and they don't have enough, liquid funds for themselves, and their retirement is not necessarily taking care of everything. So I can't even imagine what it would look like when we retire, because we don't have the pensions that they had. A lot of that has changed. So, I mean, absolutely, you have to be able to pretty much take care of retirement for yourself.
So we go to work to take care of our lifestyle today, but we're also putting monies away to take care of the lifestyle when we choose not to work. Why does it seem like people are not achieving that today? What seems to be the challenge in getting people to make that just happen?
Well, I mean, there are several different factors as to why that's not happening. Mostly it's because people are struggling every day. And if you look at the amount of things that we have to pay for with the amount of money that we're making, how can we take care of our retirement when we're just trying to make it through every day? So it takes a little bit more than just meeting your ends at this point. You actually have to save up retirement. So, I mean, we talk about the 4 challenges. The first challenge is absolutely inflation. So I know we're going to go into that today. So inflation, I mean, when you think about how much a can of soda costs, 10 years ago or 20 years ago, and you look at it now, it's absolutely a lot more. It's maybe, doubled 3 times. If you think about how much soda was 25 cents a can, now, you might get it for $1. You know what I mean? So it's just completely different. Inflation is going up, but if your income isn't going up, then you're going to have a problem.
Well, that's one of the 4 things that we've noticed that is creating, and you're absolutely right, talking about inflation being one of the number 1 killers, the silent killers of your finances. I look at inflation from the standpoint of a couple of other examples. Gasoline. What the cost of gas was back, years ago. It was crazy. Years ago, it was less expensive. Today, it costs almost $4 a gallon. It fluctuates. Here in Oklahoma, we're around $3.39, but in other parts of the country, it's much higher. Gas. And so then the price of gas affects the cost of goods. Explain how business owners, Dominique, can overcome some of these challenges when it comes to inflation and the cost of getting the goods to their doors, but how it affects us.
Okay, well, I mean, if we're thinking about the goods and services and everything that it costs to be able to maintain your current lifestyle, you basically have to find a way to overcome that challenge. Like we talked about the inflation as far as the cost. I mean, really, inflation is not going anywhere. Inflation is going to happen regardless, and there's really no way to combat that aspect of it. You just really have to be able to outpace inflation. So you want to be able to create some type of income that's going to go up enough or save enough, meaning, maybe pay less taxes, decrease the amount of debt you have so that you can put money away and you can invest at the rate that's going to outpace inflation. So we talk about investing, and wholesale investing is definitely an option as well, because wholesale investing versus if you go to the bank, the bank is going to give you maybe 2%, whereas if you're investing wholesale, you could get that 6 to 8% because the bank, they got to get their money off the top. So they're not going to give you the same rate that they're getting because then they won't make as much profit. So you just have to be aware, where are those investments? How can you outpace inflation, in order to combat those inflation that's going to happen regardless.
So your suggestion there is being a business owner puts you in a position to do some different things. Another point though, I was thinking about inflation and how it affects people that a lot of times folks just don't realize. When you own a grocery store, the inflation or cost of gasoline to get it from the farmer's plant, the farmer's places, to get it to a facility to process those goods, and then to get those goods to the grocery stores, everyone in that food chain gets to add to the price of the items. They get to add to their cost. But you and I, when we go to buy bread or eggs or bacon, we end up paying that final cost. The costs have been passed on to each and every one of us. So to what you're saying then is we have to implement strategies so that we can overcome those things. Another killer is taxes, because like you said, there's 4 things we're going to discuss. We just talked about inflation, but taxes, we're going to talk about debt, interest paid on debt, and then number 4 is less than favorable financial decisions. Let's talk about taxes just for a bit. How does taxes affect people's budgets?
Well, I would say definitely taxes impact you, because if you think about, if you have a job and you're working, you get paid on a W-2, and of course there's nothing wrong with a job. We have to be blessed, to have our jobs. However, when you do that, you're paying a third of your income in taxes. So what that means is that a third of your time you're actually working for the government instead of yourself, because you're not getting paid any of that money. So a third of your check is gone from the beginning. So you don't even touch any of that money because, you know, the W-2 form, it takes it out for you. But that's just a big part of why people struggle, mainly because if you're spending a third of your time working for the government, that means from January to April, you basically work for free. And if that happens, however, you still feel like you're making, you know, your gross income, even though you're not taking it home, then you get into more trouble because you're trying to make it up. So if you're making $50,000 a year, the government is taking 18, you're really living off of 32. So if you're living off of 32, but you still feel like you make 50, then you go get into debt, and you got credit cards and you got loans and things like that. So that's just how taxes affect your lifestyle and causes you to kind of trickle down into these different issues. Because if you were getting that money from the beginning, then you may not be in as much debt. You may not be in this, you know, the cash flow issues that you're in right now. So, you know, it's definitely, taxes is a big challenge. I mean, January to April, I mean, you're basically working for free. That's a pretty big deal.
That's huge what you said, and the fact that if a third of your income is going toward taxes, and then you have to live and create more revenue by borrowing money. The interesting thing about when money is borrowed, it's never based on your net income, it's based on your gross income. So they're figuring your gross income, but they're not talking about the third of that budget that Uncle Sam got to take out. So when you look at your expenses, I always tell people, stop looking at your net as your budget, look at your gross income as your overall budget, and look at ways of reducing your overall budget or increasing your overall budget by reducing the expenses of your gross budget, not the expenses of your net budget. And so when we talk about debt, since that problem of taxes compounds the problem of debt, then that also brings up another issue. I hear the founder of MyEcon talk about the lack of money cost you more money. And I've even heard that discussed through some of our other business leaders across the country, that idea of the lack of money costs you more money. Break that down a little bit for me.
Okay, so the lack of money costs you money. Let me think of an example. Let's say your rent is due on the 5th, by the 5th, but you get paid on the 7th. It's not saying that you don't have the money, you just don't have it when it's due. So that's a cash flow problem. So the fact that you don't have it right now or the day that it's due, you're going to pay a late fee. Or, you know, we get into all, you know, you pay something late, they charge you a late fee. Your rent is due, your car note is due. You pay it when you have it. So the lack of having it on time is costing you more money. I know I made an example of, if you get a ticket in DC, they will mail it to you and you have 30 days to pay it. If you don't pay it by the 31st day, they double your ticket. So the lack of money is going to cost you. If you don't have it, you better come up with it quick, because if you don't, you're going to have to pay double. So, I mean, if you had the money, you know, or think about it as far as you going into a car dealership. You go into the car dealership, you have bad credit. So the fact that you didn't have money is going to cost you a higher interest rate. You're going to have to pay more money in the long term. Versus if you walked into a dealership and you have $90,000 cash and the car is 70, or no, the car is 90, you can probably talk them down to 75. So meanwhile, the person that has the cash is paying, you know, 75, versus the person with bad credit, they're going to end up paying 100, 150, because over the time of having that loan is going to cost you more money. So basically that's the ideal. The lack of money costs you money, and that's just what we call a negative cash flow cycle versus a positive cash flow cycle.
Wow. And you know, actually you said something earlier when you mentioned the taxes. If taxes is robbing you out of some of that income monthly, then the lack of money is causing you to go borrow more money, which then you're paying interest on that money. It's a whole domino effect that actually gets depressing. So let's get off of that particular subject. So let's move into our fourth theme, because that lack of money, that's a painful topic for people to realize that it's costing more money. So the number four reason that's holding people back from achieving their two goals, which is earning income now and building retirement income, is less than favorable financial decisions. What kind of examples are we talking about when we talk about less than favorable financial decisions?
Well, I mean, less than ideal cash flow decisions is just basically the fact that, like we talked about, the lack of money is costing you money, and also showing you how to flip that around. I know, one example is that most people are overpaying their taxes. And if you look at the IRS website, it states that over 80% of people are filling out their W-4 incorrectly. So what that means is that most people are overpaying their taxes, by millions and millions and millions of dollars every single year. The government is taking that money, they're investing that money, and they're making interest off of it. But at the end of the year, they just give you back some of it. They don't give you what they made off of it. They don't even give you everything they took. But because we filled out the W-4 incorrectly, we basically gave away money that we could have used to decrease some of the interest, decrease some of the debt we have, get out of those financial late fees or different things like that. So what we need to do is go from a negative cash cycle to a positive one by getting our money back from the people that are taking it from us. And as we talked about taxes, I mean, they're taking out so much money, and also the debt. If you add up everything you've purchased on debt, you've paid for that item more than one time. You paid for it twice, sometimes three times. So if you're paying off something, a lot quicker, you're saving yourself money, creating a positive cash flow cycle versus a negative one.
Wow, that's powerful advice. That's incredible. Appreciate that. So, let's talk about then three strategies. And this is where how our triple play comes to fruition. What are the strategies then to overcome these four negative effects that are robbing people of their futures? Well, one of those strategies, go ahead. Why don't you share that with us?
No, go ahead.
Well, what I was going to say is one of those strategies is tax management. And you alluded to it earlier already when you mentioned the fact of how when we get control of the money or the outflow that comes out of our paycheck by adjusting our W-4, then we start putting that money back into your paycheck each and every month. Now, I talk to a lot of women. I work with a lot of single moms and single parent households. And they get these major tax refunds anywhere from $3,500 to $6,500, $7,000, $8,000. And I asked them, how do you feel about that? And they're like, man, it's great. I really need this money. Then I turned around and I asked them, I said, what would it have been? And I'll calculate that $5,000 or $6,000 divided by 12 months. And I'll say, could you have used an extra $500 a month in your paycheck or into your family budget all last year? And the overall majority will answer yes. This is what we're talking about when we're addressing less than ideal cash flow decisions. Adjusting the W-4 is a key element to putting cash back into your pocket each month. The IRS is going to give you that money at the end of the year, so why do you need to wait? Why not take your tax refund on a monthly basis? Matter of fact, they want you to do that. They would much rather you do that because they don't want to pay that money back. That's just a headache they don't need to deal with. So then when you're able to adjust that W-4 down, or adjust the withholdings up, actually, so that you're receiving that money on a monthly basis, then you can use that money toward creating a debt acceleration plan. Imagine putting an extra $200-300 a month toward your car payment. How much faster could you pay that car off? And then that car payment plus that extra 2 or 300 combined to go towards some credit cards, and then rolling that debt down. I mean, can you see how you can quickly get rid and eliminate lots of debt? The second thing is by becoming a business owner. And when you become a business owner, Dominique, tell us about some of the advantages of setting up a home-based business.
Well, I mean, honestly, there are several reasons to, being a business owner. And honestly, it doesn't matter what you're doing from your home, but having a home-based business, if you're selling cookies, if you're, anything that you're doing from the home, the IRS is actually going to pay you for that. And so what that means is that the IRS gives you several tax benefits that you normally wouldn't have if you were not a home-based business owner, because they look at business owners, you're helping the economy, you're employing other people, and they know there are not enough jobs to go around. So we need business owners to stay in business. So they'll give you tax breaks that they don't give someone, with just a job. So everyone in America should have some type of home-based business. Now, if you think about how much you pay on a monthly basis for your everyday expenses, when you are, getting your car fixed, when you're driving, your mileage, when you pay for your expenses every day, your I don't know, even let's say you had a child and you're paying your child, allowance. When you have a home-based business, you get to claim those exemptions not exemptions, but deductions on your taxes. So now your lifestyle becomes a write-off because you're a home-based business owner. So automatically you're going to save thousands of dollars a year just for having a home-based business. And whether you make money or not is really irrelevant, but you get as long as you're making the attempt to make money, now you get the same rewards that, Donald Trump, Warren Buffett, all these big time guys, because one day they weren't as big. So if you're starting small and you're working from your home, they're saying, hey, whatever we need to do to help you, we'll do it. So we'll give you these extra benefits by writing off things that you normally can't write off. So that itself is awesome. And not only that, but any income you make from your home in your business, you're taxed at a much lower rate. So like we talked about, the 33% for home for people that have a W-2, when you actually have business income, you're taxed less than 23%. So you're saving money all kind of directions. You're saving from your taxes and you're saving from your deductions. Everywhere.
Wow. So you're telling me that hypothetically, if I had children, well, let's take me out of the equation. The people that have children, because I love that particular deduction. You're saying they can hire their children? Is that what you just said?
Absolutely. If you think about how much you pay your children to maybe, clean up the house, or we have a meeting, so can you, pass out cookies, or, people that have a home-based photography business, when your child is actually taking pictures, for your business, instead of giving them allowance, pay them an income. You can put that income into something for their college education. Now you have tax-free money that you're going to use for their future. So instead of just giving them $5, $10 here for, cleaning the house, hire them as an employee, write off their income, and, you have a tax-free deduction you can use to save for their college education. So, that's just an amazing thing that you can do on the side,
I think of that deduction. I think of the Gerber baby, the baby on the bottle of the Gerber baby food. I don't endorse Gerber baby food. Let me make sure I'm clear. But that child is getting paid. That family is receiving income. So you think about, if your teenagers are going to work at McDonald's, McDonald's gets to write off the income. They get to write off their French fries. They get to write off the building. Why can't you do that with your home and start writing off a percentage, not only of your mortgage interest, but a percentage of your mortgage, percentage of the rent you pay? Check this out. Most people put 15,000 miles a year on their car. If you turn just half of those miles into business miles. That's 7,500 miles times 55.5 cents a mile. My goodness, that's 4,100 bucks. Just right off the top of your income. Then you start adding your children, your meals and entertainment. When you are a business owner, that incentive from the IRS is critical, because another thing to think about, what if you walk into your job and you get a pink slip that day? When you go to file uh, unemployment, that becomes a drain on the economy. But when you can go flip the switch and ramp up your activity in your home-based business, that improves the economy. So the IRS really, a lot of times folks have been looking at the IRS as the enemy and the bad person. Really, they're just about promoting the economy of the United States. So that's why, pardon me, we need to be looking at our own personal economies. The third step, which I really love about the triple play feature, is investment income. This becomes critical because, as Dominique has shared with you earlier, when you start moving away from 33% tax rate on wage employment or wage earnings to business earnings at 23%, and you want to consult your tax advisors on the exact percentages in your particular situation. So we don't want this to be construed as we're telling you exactly what you can and cannot do, but you want to consult your advisor. But we also understand that when your money now starts making you money, it's taxed between 9 and 15%. So which makes more sense? You going out working for money, or your money going out working for money? Tell me which makes more sense to you, Dominique.
I'm much more like the money moving. You know, I think it was a quote. I think I heard Brian Bean say one time is, anything can work as long as it's not me. You know, my
I heard
business can
that.
work, my money can work as long as I'm not working. I mean, of course, we are working now, but eventually the goal is I want something else to work, and I can go on vacation. You know.
That's, I love it. I love that statement. And this is what the triple play strategy for income shifting is all about. Folks, we know we have two goals, and those goals are to provide the lifestyle we want today. And we want to have that same lifestyle when we decide to hang up working. We need either our business or our income and investments taking care of us. But the four obstacles today that is holding people back from achieving these goals is inflation, taxes, debt, and less than favorable ideal cash flow decisions. It's time to eliminate those four obstacles, employing the triple strategy in your life. Let's take a look at your tax situation. Get control of your tax outgo. Restrict that. Increase your business income. Set up a home business. Folks, we're not here to endorse or promote any particular home-based business. Now, Dominique and I, we do have our home-based businesses. We are part of a national company called My Econ, which stands for My Economy, which is bringing this education and awareness. And so the software and support tools that My Economy provides for your home-based business is to give you the tax education. We'll give you the tracking software so that you make sure you can keep those business records. Answer the things that the IRS wants to know. Who did you spend the money with? Why did you spend it? Or where did you spend it? And what was it spent for? And then any miles that were involved. The software is designed to help you with all those things. Set up a home-based business. I know I may have folks here that are from Canada on the call. Although our laws are different, the systems are very similar. Check with your tax experts. These strategies work in other countries as well. But if you're here in the United States, what you need to do is, if Dominique sent you to this and he gave you the link for this, get back with Dominique. As you can tell, folks, she's very aware of what's going on in the economy and how it can help you. If you got this link from me, send me a message. I will give you further direction and instructions on how you can start taking advantage of making the adjustments in your W-4. We will coach you through those things. We will help you in supporting whatever business you want to set up. Or if you're looking for some ideas of a home business, we can help you with some ideas of a home business. And then start making investment income. That is the critical phase, and we want to use steps 1 and 2 to start throwing all of our energy towards step 3. Dominique, anything else you have to add?
Well, I mean, this has truly been a great thing for me, mainly because I know that financial education really needs to be at the forefront of everyone's household. And a lot of the things that, we've learning, fortunately, in my econ, some people will never know. And the awareness, being able to share this information is really what's more important. And mainly just because imagine if somebody has learned this information from elementary school, middle school, high school. It really should be in every high school education. There is a reason why it's not there. However, it's really a part of what we're doing is just trying to spread that knowledge. And, eventually, we'll grow out to be able to start educating high school students, because you'll be surprised how many people don't know the basics of financial education when they graduate high school. And honestly, I've got my master's degree, and a lot of this stuff I didn't even know, so it's really critical to be able to learn how to be financially educated, how to become wealthy, because everybody, we've said before several times, everyone in your entire working years, even if you make $10 an hour, you will make at least $1 million, at least. If you work 30 or 40 years, you're going to make $1 million. So your money is going to make someone rich. The question is, who is it? Is it going to be you? Is it going to be the government? Or is it going to be the bank? Because honestly, if we don't input these strategies into our everyday lives, then we really don't have, it will have a harder chance to be able to make it. So it's, taking advantage of capitalism, the laws that we have to abide with, and just try to get those obstacles out of the way, get rid of your debt, stop paying as much taxes, and become financially successful and be able to retire. And I tell my friends all the time, I'm going to tour the world. I just want somebody to come with me. You know what I mean? I don't want to be the only one traveling, enjoying myself. Can somebody come with me? So that's really what it's all about, sharing the knowledge and, just trying to help people.
As a volunteer for Junior Achievement, which is a national nonprofit organization, I'm a speaker for that organization. I go into high schools every year, and the curriculum that's taught through there, I'm really appalled, and I honestly change the curriculum and teach the students in high school these types of strategies. I teach these strategies in these high schools because the regular curriculum is the same traditional stuff that has your folks, perhaps yourself, in the same financial mess or the same financial unhappiness, and so that has to change. So if you like what we have shared today, please comment on this, share with other people. We will be doing these hangouts on a more regular basis. We're going to have other guests on. We're going to make this information available for everyone. Again, the triple play to financial income shifting, very critical. Manage your taxes, set up business income, and invest wisely. That's a critical component. The details we can help you with. This is Eric Smith with Smarter Money Now. I want to thank my co-host, Dominique Hackett, for being on board. Like, share, get back with us. Let us know your questions, and we'll see you at the next hangout.
All right.